You're listening to Simply Put, a podcast from FHN Financial. I'm your host, Will Compernell. 17 elements called rare earths are essential inputs to produce common industrial products like batteries, magnets, cell phones, and wind turbines. Because the process needed to discover and refine these elements is expensive and time-intensive, China has been able to use its dominant position in the global supply of rare earths to assert bargaining power as the U.S. aims to restructure international trade. On today's episode, we talk with Tom Moerenhout, professor at Columbia University's School of International and Public Affairs, about the vital role rare earths play in industrial production, how their scarcity is shaping international trade agreements, and how the U.S. could diversify away from its dependence on Chinese suppliers. Stay tuned. Coming up soon, our interview with Tom Moerenhout, but first, a quick market update. The Federal Reserve cut the Fed funds rate 25 basis points this week, as expected. There were 3 formal dissents for the first time since 2019, 2 voters favoring no cut at all and 1 favoring a 50 basis point cut. The dot plot was little changed for the September meeting, showing little consensus for the projected path of rates and a median estimate for 1 rate cut in 2026. Notably, there were a handful of soft dissents, 2025 dots above where policy ended the year. This group reflects non-voters or voting participants who wanted to leave rates unchanged but chose not to formally dissent. The press conference gave few fireworks, though Chair Powell did not push back against a January rate cut as much as we expected. The Fed also announced it would start buying $40 billion of T-bills this Friday to ease conditions in short-term funding markets. The FOMC had decided to end its balance sheet roll-off this month after money markets were showing undesired pressures on bank reserves. Analysts had expected the Fed to start growing its balance sheet soon, though most predictions were for the first quarter of next year rather than this month. The November ISMs painted a familiar picture last week, showing stalled demand and mixed signals regarding price pressures. ADP reported private sector payrolls fell by 32,000 in November, adding to existing evidence that job growth has gradually declined throughout this year. The September PCE last week, capturing the pre-shutdown economy, reported benign inflation and a decent end to Q3 consumer spending. Treasury yields sold off in the week and a half before the Fed meeting to position for an expected hawkish cut. As of recording, intermediate yields have fallen back to the middle of their recent 3-month ranges, while yields at the long end of the curve have fallen only a few basis points from recent highs. Our initial read is that the press conference fell short of the hawkish guidance investors had been expecting, though there's still not much market confidence in additional rate cuts in the upcoming months. The bond market is not fully pricing in another rate cut until the June meeting. President Trump said he will announce the next Fed chair sometime early next year. Kevin Hassett, currently the director of the White House's National Economic Council, is seen as the front-runner among the group of 5 finalists. That's all for the market update this time. Now, our interview with Tom Moerenhout. Our guest today is Tom Moerenhout, professor at Columbia's School of International and Public Affairs. Tom, thanks for coming on the podcast.
Thank you for having me, Will.
Our topic today is rare earths, what they are, their importance to certain manufacturing, and how they're shaping international trade negotiations. So, Tom, let's just start out from the very beginning. What exactly are rare earths? What are they used for, and just how rare are they?
Yeah, it's a good question, and I think there's still a little bit of misunderstanding, right? So rare earths are actually 17 elements in the periodic table, of course, and they're quite essential for things like electric motors, wind turbines, semiconductors as well, right? And especially also magnets. And they kind of fall in 2 different categories. Let's say light rare earths and heavy rare earths, but basically the light rare earths are much more prevalent. They are not so rare, and the heavy rare earths are a little bit more rare. Generally, though, we use rare earths not particularly because you can only find them in one location. Actually, you can find them pretty much everywhere. Probably in the ground under that you're sitting, you'll find some rare earths, but you don't find them in high enough concentrations, which makes them very difficult to extract economically, right? We call them rare earths because we only find sort of a few pockets worldwide in different countries where there's sufficient concentration to actually mine them profitably. And so, yeah, again, they're hyper important basically in everything that is very advanced with magnets. To get the best possible magnets in the world, you need today rare earths to be mixed in them. And when you think about magnets, I think that the easiest way that I like to describe it, if you need to transfer kinetic energy into electrical energy or vice versa, that's when you need these sort of permanent magnets. So electric vehicle motor that is turning electricity into the movement of wheels, you need magnets there. Or vice versa, a wind turbine, which turns sort of turbine movements into electricity, you need magnets for that as well.
So I want to follow up on some of that in just a bit, but I think that's a really important description that these rare earths are not particularly rare in terms of supply. They're just what economists would call scarce, in that they're so in demand in the contemporary economy that there isn't sufficient supply, or there's kind of sometimes a struggle to have supply meet demand, but they themselves are not all that uncommon.
I think that's exactly correct. I think one of the things that maybe is important to understand is, first of all, there's sort of the profitability of extraction, which can be complicated. And secondly, any type of mineral, whether it's copper or lithium or rare earths, of course, needs to be refined before it can be used. Listeners can compare that to oil. If you get oil out of the ground and you put it in your car is going to break down. You can't do anything with that, right? It first goes to a refinery. It's very similar for rare earths, and the rare earths refinery, if you wish, is a very complicated sort of operation. And right now, that is, of course, where we have a bit of a bottleneck right now in the fact that China has most of that processing and refining capacity of rare earths.
So, just to be clear, these elements on the periodic table, I mean, for those of us who are in financial markets or economists that might forget some of their high school chemistry classes, what are the household names, the elements that we would all recognize that are a part of this group of rare earths?
Yeah, of course. No. It's I appreciate you saying that. So I think that the big one that many people might already recognize today is sort of neodymium, right? Neodymium is the classic one for magnets used. I think there's one that some people might recognize. Samarium is also a light rare earth. People might recognize it because there's a big thing in one of the later seasons of House of Cards, because it was used in nuclear technology there. And then there are other ones like ytterbium, yttrium, dysprosium. So sort of all of these exotic names for elements. And these are some of the more heavy rare earths, the ones that are even more scarce than light rare earths.
Speaking for myself, I'm not so familiar with those elements, but as you said, they might even be on the ground underneath where I am right now. So let's talk about that extraction process and also the refining. Is it closer to plucking an apple off of a tree, or is it like digging for oil at the bottom of the ocean? What does it take to get these rare earths from the ground to something that is actually used in industry?
The mining part is actually initially it's sort of the classic thing that you think about, right? So we often mine rare earths through what is called open pit mining. So if you think about sort of a big pit where specific ores are mined, that is what happens with rare earths in the first place. And then the first steps are very conventional. You would crush that, you would mill that, and then you would have some type of chemical processing already to try to purify the metal. So to say it bluntly, first you just get a bunch of rock out of the ground and you crush it as much as you can, so that instead of having a minor percentage of what you really want, the rare earths, that percentage becomes a bit bigger, right? That's where sort of the initial chemical processing comes in as well. This is quite conventional. The big challenge here, I would say, is that rare earths are often found in areas with also radioactive elements, which means that if you mine for rare earths, you're actually going to generally have complicated radioactive byproducts, thorium specifically, but other ones as well. So that's kind of the big environmental and social challenge. That's the mining part. Now, then it gets interesting because when you get that out of the ground, you basically have those light rare earths and those heavy rare earths in different compositions stuck together. Imagine identical twins. Imagine that you know identical twins, but you have 17 of them. It's very difficult to differentiate between them, right? But then we need to get into a process which is called separation, because ultimately when you're making things like magnets or advanced permanent magnets in whatever defense application or electric vehicle, whatever it is that you want, you need the individual rare earths first. And separating those rare earths once they come out of the ground, that is a very, very complicated process. So what you need to think about that process is not something that you put through a production line once. That's not how that works. It's basically iterative processing steps, hundreds of times done, so continuously, and nothing can go wrong in this particular process, right? Otherwise, you're not going to be able to separate them. And then once you have them separated, that's when you can start putting them together again in ways that you want and utilizing them in things again like permanent magnets.
I think when we consider the geopolitical implications of rare earth, the kind of refining process you just talked about, I think it is important to know about whether we think we fully understand everywhere that rare earths can be found. Do we have a pretty good sense of where they can be found, or is it like oil where with some exploration you could find some new supply to meet growing demand, because there's not really much of a pattern to know where these rare earths can be found across the globe?
This is such an excellent question, and I think something that we often get wrong. Right now, we are hyper obsessed with developing projects that we know, reserves that we know are there. So we do know already today different countries that have certain reserves that are of interest. Outside of China, China has the biggest reserves in the world, but then you also have Australia, you've got Vietnam, you got Myanmar, you got Brazil, and so forth. So we do know interesting pockets out there, and we're now very obsessed with basically producing some of those deposits because we want to diversify from China. But the exploration, I think, is hyper essential as well. And that's what you're pointing towards. And that is more of a medium term play. If you explore now and you find a good deposit, the chances are that you will only be developing that deposit in 15, 20 years at best. So it's sometimes a bit skipped in the public debate, while I personally think it's one of the most important things out there is to explore, because again, you need to find the pockets with sufficient concentration of the rare earth to make it profitable to extract them. And so I think now we're seeing more interest in that. I would say still generally, if you really look at exploration budgets, they focus quite strongly on lithium and copper. In part, that makes sense because we know those minerals will be in short supply. And ultimately for rare earths, we actually only need very small amounts of them. It's just that small amount basically creates magic in the technology that you're producing. But so we have seen some more attention to exploration for rare earth from the Australians, from the United States as well, definitely from Japan, who has been a leader in this for 15 years. But ultimately, we would need a lot more. Right now, I think it's fair to say that China is outspending all other countries with respect to critical minerals exploration in general, and that includes rare earth as well. It is a little bit like oil, as in we can keep exploring and we're trying to look for that sort of perfect deposit that has a much higher concentration, and ideally things like, lower radioactive byproducts and so forth. So that is definitely still going on as something that, quite frankly, we would need to see a lot more investment in, but which is complicated because investment in exploration is risky until you hit a jackpot. And so that's where we would need public capital and public finance mechanisms to help de-risk some of that.
Yeah, I think that's a great segue to my next question, which is how the US is approaching their access to these rare earths. So it sounds like the exploration is very expensive, it's very uncertain, the profits might not come for a long time. So first things first, are the prices of rare earths volatile to the point where even gauging that long-term profit can be difficult because maybe there will be a glut and these things that, as a private company I'm exploring for, the price will just go down, and even if I find a lot of it, the profits will be minimal over the next 10 to 15 years. How consistent is the market for rare earths where a company can really plan that investment?
The short answer is that the market is not consistent at all. It's extremely volatile. But I do think things are changing to that equation. And what we have seen in the past is definitely rare earth prices volatility, and the whole story of sort of rare earths worries about diversification and so forth starts in 2010 when there was a Japan-China dispute and China withheld exports for a couple of months of rare earths to Japan. And so the whole world was crying foul. The whole world was basically saying, we need to diversify, we need to invest in our own projects and so forth. Basically, everything that you see this year happened already 15 years ago. Then what happened was that China kept exporting very reliably at a low price, which basically meant that some of the rare earth producers outside of China went bankrupt, including in the United States, Mountain Pass, MP Materials, which then later on came up again and now has a very big government investment as well. So China, by being a very reliable low price exporter, basically killed all of the potential investment elsewhere in the world. I'm maybe generalizing a little bit, but I think what is different this time around is that concern has now been repeated time and again. And basically, there is a very big pressure on governments, not just to be involved through equity investments, but to basically say, look, you need to provide some form of offtake guarantees. That can be a price floor, it can be a contracts for difference. But the point is, we cannot invest in a rare earths mine or separation facility because we don't know what's happening in the next 10, 15 years. Right now, it very much looks like the China versus US trade dynamic is there to stay, and governments are very interested in diversification. You had the same interests 15 years ago, and then there was some form of deal with China, and you basically abandoned all your plans together, right? And so I think what companies are looking for now is saying, look, we want to invest, we want to engage, but you need to offer us something extra. And that extra, the thing that really changes a spreadsheet, of course, is some form of either an offtake agreement or a floor price / contracts or difference that can guarantee us that the investments that we make right now are actually going to be profitable 10, 15 years down the line. And of what I'm seeing today from countries like Japan, who has already been doing this for 15 years, but also Australia, the United States especially as well, is that they are thinking and showing their willingness to engage in these type of instruments. And I think that can really significantly change the outlook for rare earths in the medium term.
So let's talk more about how these rare earths have shaped US-China trade negotiations this year. I think the way that a lot of people have viewed the US renegotiating all of the the trade deals with other countries this year is that the US has a lot of bargaining power because they are this massive consumer of last resort, so to speak, for the global economy. And so if your exporters want access to the US consumer, well, then you've got to, cede to some of our bullet points that we want in our trade deals. But it sounds like China has quite a lot of negotiating power here. If they have a huge supply of rare earths, and it takes 10, 15 years for the supply to change, whether it's from domestic producers in the US or from friendlier trade partners. So tell us more about how rare earths have given China maybe a little bit more negotiating power and how they factored into the demands of each country.
I think they have huge bargaining power, and I think it's been pretty clear they've shown it. So I made that distinction very early on between light rare earths and heavy rare earths. Heavy rare earths you include in magnets that are resistant to high temperatures and so forth. Anything defense related, anything advanced energy related, you need those heavy rare earths. Today, China has a full monopoly on that. I'm talking 99% of production. That is a chokehold. I don't think we need to sugarcoat that. And that's a chokehold that we have allowed one country, and I don't really want to pinpoint China here, but we have allowed one country to get to that position over the last 15 to 25 years. And arguably we got warned 15 years ago. And so they have used that in their negotiation with the United States, and I think rather successfully so. I think we already saw that some firms, for example, in the United States had to, pause or delay some of the production. Ford was one of them. So the pressure really was on the US government to basically make sure that you had rare earth supply from China. It's kind of funny to somebody who's worked on critical minerals for a long time. Rare earths are obviously important, but you need to know that the amounts that we use are so extraordinarily minimal that this couple of grams here and there actually is changing the full geopolitical outlay, right? And I think what happened this year was quite interesting, right? So you had in April, you sort of had export licensing requirements. Since then, what we have seen is sort of a back and forth, that ping pong game between China and the US. And when the US leveled that up in October this year, China basically expanded those controls. And the October move from China was really fascinating because basically they added more rare earth elements to this licensing scheme. All sorts of rare earth technologies also got under export controls, whether that was mining, separation, smelting technologies, and so forth. And they threatened sort of a much bigger global supply chain impact. And that October move was basically China saying very loudly, are you sure you want to do this? You can deal some blows to us, but we can hit back very strongly. And as you know, after that, we basically had the deal. Those new controls were only going to be implemented in November, December, and then Trump talks, and we sort of had the deal where there was some suspension of the implementation of those rare earth controls for 1 year, but US paid for that. China got a 10% cut to some US tariffs and sort of easing other US investment restrictions. So I think they have been very cognizant of the role that rare earths play in not just production today, but also technological development of some of your most important companies. Tesla, whether that is Apple, whether that is Nvidia, and so forth, they also all rely on some of these rare earth suppliers, and they've played that to their advantage. And I would say in that game, they kind of won that duel.
These trade policies that the U.S. is trying to strike with all other foreign countries, the situation is very fluid. But as we stand right now in December of 2025, what are those agreements between China and the U.S. about rare earths? Are there controls for how much China can export to the U.S., or what is the agreement that is currently in place?
What we've basically seen is that China uses a system of export licensing, which basically means they're not actual quantitative restrictions, if you wish. It's more saying, you need a license from the Chinese government if you want to export to suppliers in the United States and other areas in the world as well. And then, of course, it is through that export licensing that they can actually cut supply, increase prices, whatever it is that the CCP wants to do. Now, the way the deal looks like is that China has committed to issue some general export licenses for rare earths, but also for other ones that were involved in restrictions: gallium, germanium, very important for semiconductors, antimony, graphite, and so forth. So what we're getting now is sort of a more predictable licensing regime, which is very important for producers today, but it's similar to what we have seen in the Europe-China negotiations, actually, where initially the license that a company would receive to export abroad would be a couple of months. And so what Europe has been trying to push for is, can we get a commitment to a 1 year or even a longer period export license, because that creates much more certainty for our producers, right? And I think that's where we are right now, is that we definitely eased sort of this imminent crunch that could have really hurt productive capacity today. So not like a year into the future, but basically today. Definitely not yet returned to a purely commercial relationship, because again, these sort of licensing procedures, they can be adjusted quite easily. So I think the fear that many people have in the industry, and I think it's fair, is that we've gone through 2 rounds in the boxing ring, if you want, right? The April one and the October one. And each time there was then negotiations that led to sort of a détente between China and the US on this particular issue. Many people that I speak with are kind of saying, look, we know it's going to go to round 3 and 4 and 5. We would rather not have that, but that will probably happen. And what if at one point we actually don't come to a détente, right? This can really impact production. And again, everything that US and the EU and Japan and others are doing around diversification, this is really good and important work, but it does not solve your problem in the next 2 or 3 years. That's more a 5 to 10 year play.
There's clearly a global market for these rare earths. And so, just to dig deeper into these dynamics, if the US finds it difficult to import rare earths from China, then I would think that those exports that would otherwise go to the US go to any other country but the United States. And so then there are more rare earths available from, let's say, Australia to be exported to the US. And we might have limited access to what China is exporting, but then it just has this circular flow where I would still think rare earths are available to the US. So has this changed the negotiations between the US and Australia or Vietnam, different countries you talked about that have a lot of rare earths, where suddenly the US, instead of leaning on China, can lean on those other countries for their rare earths?
So absolutely. The US has been going around in the last 2 months specifically, had deals with Australia, had deals with Japan, with other Southeast Asian countries as well. And when I say deals, it's more sort of memoranda of understanding, MOUs, that put forward the goal to have joint investment and so forth. What I'm seeing today, both with respect to Japan and Australia, two big players in this space, in the rare earth space, is that the US and Australia and Japan are actually indeed working on de-risking the projects and actually getting sovereign capital into the sector. So it seems much more than MOUs from a couple of years ago, where you had 50 million of them, and there wasn't really huge results in terms of investment coming out of those. Right now, I do think it looks different. So to your question, I think the US is exactly playing that game. And even though There are obviously, trade dynamics beyond rare earths. This is becoming an issue in trade relations between the US and non-China countries, Australia and Japan, right? What you have here is that this can focus on current production as well. You have current production in Australia, you have current production within the United States as well. And of course, the joint de-risking is interesting, right? To have two flags of two countries on one project with investments coming from both of those countries. This is a very strong signal towards private investors, of course. But I think we also need to talk about the certain limitations. And I think one of them is time. This is going to take a couple of years to get online. Many of those projects. I think the second one is what stage are we talking about? Right now, we see a lot of investment in the mining, the extraction part, but we need a lot more in the separation part. And I'm not saying it isn't happening. Japan is doing it, the United States is doing it as well. But that separation stage, that is so essential that we need to have, much more speed on that issue. And then the third one is those heavy rare earths where China basically have a 99% monopoly, which will continue to give China a whole lot of leverage because that's not something that diversifies so easily. And that is a result of the knowledge of geological deposits. Most of them are simply in China. So this is to your earlier point on exploration, that will be hyper essential that US actually also works with countries like Australia, Japan, and different ones. In Africa, you have several countries as well, in Brazil, to incentivize exploration much more specifically on heavy rare earths.
I want to end the conversation asking about your prediction for the next, let's say, 12 months of U.S. access to rare earths, because we could talk about 10 to 15 years, and that's a much longer time horizon with, I'm sure, much wider range of possibilities. But over the next 12 months, do you think there are elevated risks of potential shortages where, like you said, if there's no détente between the U.S. and China, there could be a huge bottleneck in the manufacturing for really essential industrial and consumer goods? Or over the next 12 months, do you feel like there could be a healthy recalibration of the U.S. sourcing in a way that makes it more resilient to any future political shocks?
I'm in touch here in New York with several companies that look specifically at geopolitical risk who follow all of that, right? And I know that most of them are actually internally split between, are we going to have some form of bigger US-China deal that is going to allow for reliable exports, or is that going to fall apart? I think that's the situation where we're in. And that to me sounds like a pretty bad and uncertain situation to be in, to have that level of unpredictability. So do I think that we could see another sort of flare up between China and the US within 1 year, within the next year? Yes, obviously. I think many issues have not been resolved. Trade war, the trade Cold War, if you wish. It's not really trade Cold War, it's active economic conflict going on and will continue to go on. And within that, you will have a bunch of geopolitical difficulties, whether it's Taiwan, whether it's other areas of the world. I predict that we will still see rare earths feature very strongly over the next year. As a result, I also predict that we will see a much more active US government and other governments in terms of investing directly in mines or offering things like floor prices and contracts for differences beyond what they have invested right now. So we have seen remarkable projects already. We don't need to talk about them, but MP Materials is one, but it's really, really not the only one. We have seen investment in Lynas, in Arafura, and different other very interesting projects. I think we will continue seeing that much more to de-risk those supply chains, because at least for now, and that's a good thing, governments have woken up to the reality that that level of uncertainty is not going to change in the short or medium term if we don't actually get actively involved. I think we will still see concerns about rare earth supply in the coming year, and I wouldn't even say in the coming year. I think we will see concerns about that in the next 5 to 10 years until different projects come online.
Tom Moerenhout, thanks for coming on the podcast.
Thanks for having me.
That was Tom Moerenhout, professor at Columbia University's School of International and Public Affairs. What really stands out to me from that conversation is how much market share China has for rare earths at this point, and because it takes so long for exploration to yield new supplies, their dominant position will give them a lot of bargaining power in trade negotiations with the US for the foreseeable future. The détente between the US and China also appears to be on shaky ground, so US access to rare earths could be significantly disrupted at the drop of a hat if tensions between the two countries escalate. The government data backlog will continue to clear over the next couple weeks, though the publication schedule for a few releases is still to be determined. The November jobs report comes out next Tuesday and will include the first look at payrolls data for October. The shutdown prevented the BLS staff from collecting the household survey's information that month, but data from the establishment survey is being tabulated using business tax data. Also next week, October retail spending and the November CPI will give investors important information about the fourth quarter economy. The BLS will not publish an October CPI because of data collection issues from the government shutdown, so last month's data will be even more important than usual. The data highlight during the week of Christmas will be the first estimate of third quarter GDP growth on December 23rd. The advanced release of Q3 GDP was originally scheduled for late October, but was canceled, so this will be the first look at quarterly output. Using the existing data, the Atlanta Fed's GDP Now model is estimating 3.5% annualized growth. There aren't many public appearances from Fed officials scheduled over the next 2 weeks, but some could pop up after big data reports are released. Some may also feel inclined to clarify their views given the lack of consensus behind this week's rate cut. The Supreme Court is expected to rule by the end of the year on whether President Trump exceeded his emergency power authorities by using the IEEPA law to implement many of this year's tariffs. The oral arguments in November suggested justices were skeptical the law allowed such unilateral action, but questioning during those hearings can be an imperfect indicator of the eventual decisions. That's all for today's episode. Thanks again for listening. I'm Will Compernell, macro strategist with FHN Financial. This episode was edited by Bill Stanfield. Don't forget to like and subscribe to Simply Put wherever you get your podcasts. Email simplyput@fhnfinancial.com with any questions or comments. This podcast is presented for informational purposes only and is not intended as an offer or solicitation with respect to the purchase or sale of any security. Views expressed herein accurately reflect the speaker's personal views about the data, news, trends, events, etc. discussed herein or any subject securities or issuers. No part of their compensation was, is, or will be, directly or indirectly, related to any specific recommendations or views expressed. FHN Financial, through First Horizon Bank or its affiliates, offers investment products and services. Investment products are not FDIC insured, have no bank guarantee, and may lose value.